Welcome back. Well, in this week's Economic Week Ahead, tariff trade negotiations, key central bank decisions, and inflation numbers take center stage. And joining us to walk us through all that is happening this week is Joshua Mahony, Chief Market Analyst at Scope Markets. Thank you so much for your time, Joshua. Let's actually start off with the US-EU trade deal. And actually quite interesting that the markets reacted positively. I remember at some point the European markets were at a 4-month high, but actually ending off in red. And I'm wondering at this point, as much as a deal has been reached, that there's more information coming out that maybe provides an environment where people need to apply caution.
Perhaps. I mean, I think there's also a risk associated with Russia that's starting to emerge. We've heard Donald Trump essentially saying that the deadline is now like 12 days away or something for them to try and find a resolution between Russia and Ukraine. So whether that's going to suddenly see a spike in terms of inflation coming from higher energy prices, things like that, that might be a potential left field risk coming into play. But right now it does feel like, in terms of these trade deals, they're pretty much the same as the last, right? The Japanese deal was 15% plus a bunch of, money supposedly spent on infrastructure projects or projects in the US. Whether that comes to fruition, what it's spent on, we don't know. It's the same kind of story in terms of the EU. Ultimately, it takes away a lot of the uncertainty, though, so it should be a net positive for European equities.
Yeah, very, very interesting what Trump said. And I quote, "It's a very powerful deal. It's a very big deal. It's the biggest of all the deals." And we know that he also tends to hype things up as well. And I actually remember from the last meeting that the US had with China, he had similar words. And of course, we know that the US and China are back at it. More trade talks taking place in Sweden this week. How significant are these talks after the 2 rounds that we've already had?
Yeah, massively so. It's really interesting because he said that he's standing firm on that 1st of August deadline. So there's no taco this time around. There's no chickening out, apparently. But then, in pretty much the same breath, we see him getting asked about the China deal, which is on the 12th of August, that deadline. And he said, well, we might extend that by like 90 days. Right. And that shows that as long as you can get the likes of the European Union across the line, the likes of Japan, you've got a handful of countries that are really going to be key. Get them across the line ahead of that 1st of August. The other one that would really impact inflation expectations within the US is China. And China really has sort of found the US Achilles heel when it comes to the rare earth materials coming into the country. So they're likely to take a bit more of a cautious approach to that, take a little bit of time over that, and likely reach a deal. I don't think we're going to see them reach a deadline and see a massive spike in terms of tariffs, because then that means that they don't get their rare earth materials and businesses come knocking at Trump's door.
Yeah, I mean, we're talking about parties that are finding it difficult to get to an agreement. We also have Trump and Jerome Powell. I'm sure that Jerome Powell has a very, very difficult task ahead this week. Of course, already there's been heat from Trump on the Fed building renovations. And of course, Trump also saying that he's taking too long to reduce interest rates. What tone then are you expecting from Powell, considering also that it's his decision comes on 2 days before the tariff deadline?
Well, I think it's going to be a really interesting meeting because, look, the fact of the matter is that Trump wants him to cut rates. He's not going to do it this time around. Markets essentially pricing in something like a 4% chance of a rate cut, right? So it's not going to happen now. The next meeting beyond that is September, and markets do expect them to cut rates then. They expect another rate cut in December. So 2 rate cuts for the remainder of the year, bearing in mind the next meeting is September, is not bad going. So what's he going to get really from trying to push Powell out? Not much in my mind. And the fact of the matter is, if he wants them to cut rates, he needs to provide certainty for them and a more stable economic environment. And to do so, rather than having, the possibility of 30% or 40% tariffs around the corner, the certainty of 15% tariffs, and then they'll be able to say, okay, that's a short-term bump in terms of inflation, we can look through that. That can see them cut rates. So it's going to be an interesting meeting, if only because we're seeing a precursor of different trade agreements that lay them up to be able to say, actually, if we see more trade agreements like this, and we don't see a sharp rise in terms of major tariffs in the coming months, then September we're likely to cut rates, and then we're on a new trajectory in terms of lower interest rates for the Federal Reserve.
Well, a stable economic environment provides a stable labor market. But I mean, with all the uncertainty amid all the labor market data that is coming out this week, can we maybe expect to see a little bit of softness?
It's difficult because every month we expect to see softness and it just doesn't seem to happen. Now, you can often look into the data and say, last time around, well, really strong payrolls number, but half of it was down to government jobs. So you can always try and sort of square it in a way that gives you one sort of view or the other. Ultimately, the US jobs market has held up well. There's no reason at the moment in my mind to think we're going to see a sudden collapse of it. Unemployment is still very low. We're not necessarily seeing a sharp rise in terms of that. So I don't necessarily think that the jobs market is going to signal something that pushes the Federal Reserve to need to act out of essential desperation to rescue the economy.
Yeah. Well, and of course, to have a good economy, you have to have good performing companies. And we do have more of the Magnificent Seven companies posting earnings this week. Where will your attention be then, considering the kind of mixed picture that we got last week? Good results from Alphabet, but a poor showing from Tesla.
Yeah, I mean, look, Tesla's got so many headwinds. It's crazy that Elon Musk has managed to alienate himself to both sides of the political spectrum. So I think when you're looking at the Mag 7, you look at the performance over the course of, say, this year so far, it's not the Mag 7, it's the Magnificent 5 and the not so Magnificent 2. And therefore, Apple, that's going to be a really interesting one to watch out for, because ultimately any of these big tech names that really rely on physical goods to be imported and exported around the world, the likes of Apple, the likes of Amazon, how are they going to be impacted by tariffs? That's going to be absolutely key. At least when it came to the Alphabet earnings, we saw very strong capex, we saw strong search numbers. So when it comes to the capex side of things, how are the hyperscalers going to be doing in terms of the strength of their purchases? TSMC numbers very strong previously, so that points towards continued demand on the AI space. And then of course a lot of it comes down to sort of cloud revenues and things like that have kind of been the backbone of some of the numbers for likes of Microsoft and the like, and for Meta and for Amazon. But are we going to start to see the AI investments really start to pay dividends? That's going to be a key theme as we go throughout the week.
All right. Well, thank you so much for your time and just giving us insights on what to expect in this week's economic calendar. Really appreciate your time, Joshua. That was Joshua Mahony, Chief Market Analyst at Scope Markets, with the Global Economic Week ahead.